All right, talking about the market, I want to talk a little bit about the market today. I didn't want to dive into like different, different like hot markets and cold markets, because there's opportunities in every market if at the right price. And so I think that's the biggest thing, is focusing on the underwriting. But this right here, this graphic kind of lays out the different strategies that you can leverage based on the real estate cycle. So when we start talking about the SM, is a seller's market one, seller's market two. Then you got a buyer's market one, buyer's market two. So we're somewhere in BM1, I would say, probably at the, I think we're probably halfway in BM1, because I don't think there's going to be a large drop in overall prices, just because there's limited supply on the market. When you look at the inventory out there, especially on the first time home buyer, that we saw a run up that inventory increased over 50% or more in a lot of areas, but it was the wrong inventory. It was inventory that was over the median home price in that area, a lot of luxury real estate, a lot of expensive houses, because new construction and builders, they were building $500,000 and $600,000 houses. They weren't building $200,000 and $300,000 houses. And so the first time home buyer is more of those in every market, people that's looking to try to get into the first home. And that's the opportunity, whereas that you can still do a lot of these strategies. And so you see here, when it's a buyer's market one, you got short sales, REOs. I think with right now, traditionally, that would be the case. But I think with where we are with the pandemic and the laws that were passed, with delaying foreclosures, and then with the banks working with homeowners, I don't think we're going to see a whole lot of short sales and REOs. But some of the states like Florida, Texas, Alabama, where you can roll them out really fast, that after you 90 days late, that you could be foreclosed on in less than a year. But some states it takes a little bit longer than others. You can buy notes as an investor, you can buy rental properties, and you can do the BRRRR strategy, where you buy, renovate, you rent it out, and then you refinance it. And so these are the strategies today that work in today's market, where you add rentals to the portfolio, even in a high interest rate environment. Because guess what? If the property underwrites because the interest rate is just another number, you plug it in. If it cash flows, it cash flows. If it doesn't cash flow, you need to pay less for it. And it's really that simple, that if it's a higher interest rate, you just have to pay a little bit less, so you get the cash flow that you care about. And after that, you can always refinance in 2, 3, 4 years, when rates go back down around 5 or 4.5%, 4%. That now you can refinance and you're going to cash flow even more with the property. And so these are the kind of strategies to be thinking through. Fix and flips, you still can execute those, but you need to be judicious with your underwriting for your after repair value. I just told you we picked up one that we're going to flip in Panama City, but it's we buying 127,000, and we know the upside, that if worse came to worse and interest rates spiked at like 8%, that this property would still cash flow at where the market rent is in the area. And so that's the thing that you need to just know, where you can have multiple exit strategies, and that hey, if you're conservative with your after repair value, if the market shifts a little bit in between doing the construction and you listing the property, that you're still going to be good. And so I think that's the thing that you got to understand, is that you got to just be more conservative for the future, that you don't know what's going to happen, and have multiple exit strategies, just to ensure that you're successful. And like with this house, the reason why I moved on is like, well, you know what? It's a solid deal. It's only 1,150 square feet. It's got the new roof was put on in 2019. The flooring is already out of it. We literally just got to come in with a new HVAC unit, new flooring, new paint, new kitchen cabinets, appliances, and new windows. And we may just replace the window panes. We may not even replace the windows if the structure is good. And we're going to be in and out in 30 to 45 days and have it back on the market for sale. And so that's the strategy, where kind of you go through that process and understand it's an all brick home, and it's on a nice lot in the right part of town, not too far from the bridge to go to the beach. And that's the thing. And so as you go through, you look at those factors and you manage your risk based off of that, and you can be successful. And then for buyer's market two, as the market kind of bottoms out, is when you start picking up the rental, more rentals, and continue to build up and do more of the burrs where you repeat. So the difference with the buy rent, you buy it and rent it out, but then they just add the extra R on it when you start repeating it and doing it at scale. But you see, when you see sellers market 1 and sellers market 2, that is a lot of the same strategies, but they bring the fix and flips back in. And then look at that sell portfolio. So as the market's going up, at the peak is when you want to sell. And that's what a lot of people, you see a lot of people selling their portfolio as the market was running up the last couple of years and sitting on cash. So now they can buy here. And there's no way it's the same cycle. But I think at the end of the day, even when I look at the apartment buildings that we bought the fourth quarter of last year, it's like you got to make sure that you negotiate great deals. We bought a 40 unit at $48,000 a door. And we only had to add like around $6,000 to $7,000 of capital to renovate the units in order to get over $300 rent buck. And so with that, right now in the market, you're at like $100,000 to $110,000 new construction to build one unit. So if you can buy a unit for $48,000 and only put 6 or 7 in it, and then rent it out for market rent at $850 for a 1-bedroom and $950 for a 2-bedroom, then you're gonna win all day because there's nobody able to compete because they're not building any new construction nowhere near that cost. And so that's what you need to look at